Hello there, and welcome to our webcast on the FinTech Disruptors research that we've just launched at the end of 2018, December last year. We're talking today about AI in the context of the breadth, the range of things that's happening across FinTech. The research is now in its fourth year, and for those of you that have come across it before, this will be old news. But for some of those of you joining us today that haven't heard about what we do with this research, it's really a combination of talking to industry leaders, combined with the results from a survey going out across Europe, Middle East, and Africa of sort of several thousand bankers and fintechs. And the purpose really is to gauge both what's happening out there, what the market is telling us, but also to provide some sort of context for what the future of fintech looks like, and both what the opportunities are, but also what the challenges are and how they're being addressed. So first, a little bit of background about ourselves. Magna Carta is a communications management consulting firm. We've worked across financial services, payments, banking, helping clients, large and small, with their visibility, their communications and their positioning, ultimately really helping brands stand out and tell a unique story to help them drive their business forward. A large part of what we do is connected to producing relevant content, and the research initiative has come out of our desire to connect with the marketplace in a way that both underlines the credibility that we have in terms of our knowledge of the market, but ultimately also helps the marketplace see what the challenges and what the opportunities are. So the research has been going for some 4 years. Over that period, we've created quite a large platform community of different commentators from across the marketplace. We get insights from bankers as well, alongside fintechs. And the next phase of it, really, over the course of the next 12 months, will be to turn what has traditionally been production of white papers and lengthy research documents and open that up into a platform that the marketplace can get access to and ask their own questions of some of the data that we've been gathering over the last period. We started with a research piece that looked Europe, Middle East, and Africa, and what we're talking about today is the findings of the latest round of the findings for that region. But in the intervening period, the initiative has gradually been expanding. So we've now extended the research to provide a specific view of what's happening in Scandinavia and the Baltics. There'll be an Asia review launching in time for the Asia event season in spring, and an Africa-focused research piece in the offing for a bit later this year, to be launched both simultaneously in London and also at a large event in Africa. So let's talk a little bit about this year's piece and some of the outcomes that we've seen from the interviews and also the results from the survey. In the main, we've called this the new Road of Fintech. We've taken the view over the previous 3 years since the beginning of the fintech revolution. We're through this first phase where there's no question that fintech is here to stay, that it's gaining in strength, and that the banks themselves are adapting to the implications of fintech and the role that digital technology is playing in financial services. We've come through that first phase, and now we're into a new period where advanced technology, particularly AI, is taking center stage, and banks and fintechs are trying to understand what the implications are for their businesses, how it can be used, how it can be leveraged, but also what the challenges are. AI in particular, we've come on to some of the data later in the broadcast today. AI in particular is dependent on the quality and the amount and the availability of data behind it to make sure that it's effective. And data is one of the key themes of challenges that the market is facing, and we will talk about those today as well. Just then a snapshot before we move on into the meat of the research. This is just a profile of the interviewees that we talked to this year. We were supported by Klarna, the Scandinavian fintech, now unicorn, this year for this year's research. We spoke to a number of senior people within Klarna in preparation for the research, but we've also talked to players across the region, across Europe, Africa, and also in the Middle East, and there's a snapshot of those there. And if you want more details on the research, you'll be able to download a full copy of the report via the link on this site, and also there's a link at the end of this presentation where you can also read the previous issues of the research. So, let me just move forward. Sorry about that. So, the key takeaway from this year's piece has really been that there are we've defined four very clear but also interlocking trends which are driving forward the future of financial services. And we've taken to start calling this realm digital finance instead of fintech, mainly because the definition of fintech has become quite cloudy, because large vendors, as much as smaller companies, have started to use the term fintech to describe themselves, but also banks are moving into the fintech space. So it's both an adjective and a category. So we're talking, what we like to talk about is digital finance. I'm going to talk through each of these four themes during the course of today. But I do want to say, in the context of this being about AI and the impact of AI within the AI Summit, I do want to say that automation is down as the third block here. But as I said at the beginning, each of these trends are interlocking, and I think without if you only do three of them, if as a company you only focus on three of them, and you ignore the fourth, I think the road starts to crumble quite quickly, and that certainly seems to be the takeaway from what the market has been telling us over the last year. So, if we then look at the findings, we start to look through the findings rather from the research. This is what the market is telling us: open APIs, data analytics, automation, and AI, and of course mobile are the key driving forces. What's interesting between this year and last year is that in this year, mobile as a standalone opportunity, or view, the perception of mobile being a standalone opportunity has decreased quite substantially, and increasingly what the market seems to be saying is that mobile is no longer an opportunity in itself. It's taken for granted. Mobile has become therefore a hygiene factor, and the other elements, this concept of openness, of open APIs, better data, more automation, and use of AI have taken precedence and have become much more important. And I want to move, we'll talk now through each of these building blocks in turn. I'm just going to refer to some notes that I've made here so that I can keep this short for those of you that are listening. So, relevance. What do we mean by relevance? Well, the big challenge for banks in particular when the fintech revolution, if we can call it that, kicked off was suddenly the feeling that they were no longer relevant. Interestingly, this year there's actually been a bit of a backtrack on that, primarily because of issues around data, and we'll come to that separately. But for the purposes of today, I think, for this research, what we're saying rather, is that all relevance is about thinking really about the customer, and increasingly, as much as banks in the past have talked about how customer focused they are, the new technology that's now available, it really does mean that institutions, fintechs, service providers can stay relevant to their audience in a way that they weren't perhaps able to before, primarily because of their ability to see what's happening, how customers and consumers are engaging with them and their services, and then refine accordingly. And one of the big takeaways from this year, I would say, is that some of the fintechs, particularly those that are gaining in scale and are really succeeding, is their ability to take on board the insight they're getting, to interpret that, and then quickly turn that around to respond, refine, and improve their products. So relevance, in this case, we're talking about to audiences, we're talking about to target customers, but also to the marketplace and its stage of development. And this does relate in particular to AI in the context of today, because in some cases it's unclear just how much automation customers really want at this point in time. And therefore, and this comes back to what we were saying before, the interlocking nature of all of these blocks is that relevance is only as good as the data that you have. Without the right data, you can't understand. Should you be more open to working with partners, or should you introduce more or less information or automation, or hold the automation back? Go forward. So we'll start now to look through some of the data, some of the statistics. I think there's a bit of a muddle on the presentation slide there, but that says the number there is 56%. And I think what's really interesting about the findings from the research in terms of relevance and this concept of responding to changing customer need or demand is that the banks still struggling to do this. In comparison, fintechs are much more able to have the data infrastructure in place and the analytics in place, that they can see what their customers are doing, perhaps not necessarily in real time, but some actually can in real time, and then respond to what their customers are doing. For the banks, that remains much more of a challenge. Partnerships have been talked about within the context of fintech for the last couple of years, and certainly when we did our report 2 years ago, partnerships suddenly appeared on the radar as something that banks were really keen to get a handle on, to partner with fintechs to help drive forward the transformation. 2 years on, that's still the case. But the realities of those partnerships are starting to come home and to be more visible. The challenge primarily being that a small startup or a smaller early stage financial services company, is a very different type of organization to that of a large bank, particularly a legacy bank. And some of the outcomes of the questions that we've been asking, particularly banks over the last year, is how are they finding that experience of partnership? They still want to do them, but they're much more aware of the challenges that those partnerships bring. Let's move now on to this idea of openness, and I'm just catching myself up with my notes, sorry. And what do we mean by openness, and why is openness a key trend for the next phase? Well, regardless of the regulation, and of course regulation, particularly in Europe with PSD2, in the UK with open banking, and other markets as they start to realize the opportunity and the need for greater connectivity between different service providers, particularly across financial services. There is a regulatory drive, but also the digital drive. The likes of the big digital platforms, whether it's Amazon or eBay, national supermarkets to some degree, are starting to realize that they need to have proven rather that they need to offer services from different providers to maintain market share and to make use of the audience that they have online. And that's going to be a driving force, a driving theme for financial services over the next decade. It's at very early stages. PSD2, as we know, only came in last year, and when we talk to the marketplace, it's quite clear that strategies are not really yet formed and moving at markedly different speeds. But nevertheless, there is going to be a need to understand what an API strategy should look like, what the opportunity of PSD2 is going to be, and to try and define that value proposition. That being said, as you can see on the screen there, more than 1 in 2 of survey participants are still trying to define what that value proposition actually looks like. And there again, you can see here, that the market is moving at multiple speeds, and it's not really clear as to what where the biggest opportunities are. There's a feeling that multi-account management, for example, account aggregation, there's fairly obvious top-line opportunities, but with a market, with a regulatory move that's so new, and strategies that aren't yet defined, there's no proven business case for any one of these, and the next decade we'll see that play out. We talked about partnerships previously, and you can see there that partnerships are still way up in terms of a priority for banks to help them meet their goals, drive digital transformation, and connect better with customers. But their experience is markedly different. 1 in 2 banks say that they need to invest time to decide who they should be partnering with. It's important. They also, an equivalent number say that it's important to align vision and their market approach, and that partnerships work best when products are complementary. But of course, as we said before, a very large institution with multiple service lines compared to a much smaller organisation that's newer on the market, has a different culture, is more technology centred and less bank centred. These have quite differing perspectives. So what's clear from the research is that yes, in principle, in theory, partnerships are valuable, important, needed, but getting them right is a much more delicate dance. If we then move on to automation, and by that we've sort of gathered a whole we mean a whole combination of technologies that include specific forms of advanced AI as much as they do simply automating particular routine tasks. Automation is without doubt a clear driving force for fintech today. It crops up time and again in every interview that we conducted. We conducted some 30 interviews, and I think without fail, it was a key question, talking point amongst every interviewee that we spoke to. Nevertheless, the challenges of automation are somewhat different, and just to go back to this idea of this sort of interconnected nature of these blocks, a strategy which delivers a strategy which is targeted only at automation will likely fail, because without understanding where automation is relevant and where it's not, and then without the right data to make sure that you're acting on sound advice, if you like, on sound insight, it's not going to get you very far. And at the same time, data in itself, the quantity, the availability of that data, particularly for newer service lines, can be quite restricted, can be very limited, and as a result, you might need to be more. You might need to have more partnerships. You might need to have more opportunity. You might look for more opportunities to be open with other partners, and you might need an API open banking or PSD2 strategy to make sure that you've got the data so that you can see where automation and where AI might fit and might deliver the kind of benefit that your organization will profit from. Nevertheless, as we said, it's a talking point, and getting on for 60% of the audience as a whole felt last year that investment in AI is going to dominate this year. It's interesting. I would say from our perspective, mainly because previous years it was all about payments and last year I think it was investment in blockchain technologies that took center stage, whereas in the last year it's changed completely. So there's an element here also, just to underline, there's an element also of faddery to this. That AI is definitely the industry's next big talking point. And the reality of that is that we will move through this period of hype to a presumable peak of hype, a trough of disappointment, before we start to see the real benefits and the real winners and the real winning use cases of an effective AI and automation strategy. So data is the fourth of these building blocks. It's by no means the last or least important. If anything, data is the foundation of the foundation for the future of fintech. We said at the beginning that relevance is dependent on an ability to understand what customers want and when they want it, and indeed, whether you should be offering a service right now or hold back until the market is ready for it. We've said also, that a strategy for openness, whether it's PSD2 centered, whether it's built solely around data sharing and APIs, or it's simply looking for more partners. Data is what's going to inform where you need to be focusing, where organizations need to be focusing in terms of their strategy. And also, when it comes to automation, it's very, very difficult to understand which processes, which tasks, which customer-facing operations even should be automated unless the data is there to support you and provide you the right guidance. As we said, as I said, previously in other presentations, this year I think what's clear is, because of the stage of development of the fintech of the digital finance marketplace now, we have moved from this phase where there were Davids versus Goliaths to a period where it's no longer a them and us, a bank versus fintech. The fintechs themselves many are starting to get to a scale where they themselves are at the risk of becoming legacy operators. And when it comes to data, both sides need to, are struggling to, it seems, come to terms with the amounts of data, the quality of data, the availability of that data, and it's really not a question of no longer of fintechs being in a much stronger position simply because the technology is newer, and that legacy question is an interesting one. I think it's also important just to say that this sort of next phase is clearly asking more questions than it answers when it comes to what's happening in financial services. Data has become the axis around which the market is moving, but it's also become the biggest reputational existential potential risk to financial services. And I say that because obviously there's been a large number of data breaches over the last few years. We've also had a damaging scandal around data related to Facebook. And as a result, the sort of slightly slower pace at which banks have moved so far has also become a bit of an advantage for the banking industry, the traditional banking industry, to the point at which many financial institutions are telling us that they are seeing an opportunity for this concept of data, of being custodians of customer data, as becoming a kind of key opportunity for them, and a key sort of reinvention of the reason for their existence. That said, there's no doubt, there's no question that banks and fintechs are going to have to understand, that they need access to data to be able to improve their products, to survive, to stay relevant, and all of those things. And the challenge, therefore, is just going to be this balance between at what point does marketing and promotion become too much and start to damage the reputation of the organization, and at what point should they hold back in terms of of how much they're churning and making use of the data that they have access to. Data in itself is also a problem, because without the suitable amount of it, without the right kind of availability, without the right quantity, the insights that come out can be wildly inaccurate. And again, as we said before, that really relates to how each of these four trends are interlocking. It might be that to get better data, to get more accurate insight, you need a strategy which is centered around openness and working with different partners, so that between you've got a much more accurate assessment of what the customers actually want. The example that's most often given is Amazon trying to sell pink shoes to a man in his 40s on the website. Well, there's a possibility that might be what he wants at that time, but in reality, there's probably some sort of relevance algorithm that needs to be improved there to understand if the person that's looking at that particular product is actually the person that the company thinks it is. And that's clearly going to be one of the big challenges, both for gathering of data, partnering with other organizations, and also increasingly around technologies which drive automation. When it comes to the actual access to data itself, it's really clear that fintechs are way ahead of banks in terms of the access and their ability to act on the data that they have access to. It's a question of it's double the proportion of banks think data is an opportunity of the fintechs. The fintechs are largely, albeit that there are some challenges, are largely already there. And equally, when it comes to an ability to respond, to stay relevant, and fintechs are way ahead of traditional banking in their ability to see what customers are doing, how they're using their services, how they're responding to the improvements or the upgrades that they're offering, and then turn that back into product optimization and improvement. The banks are still struggling with that, and they're still looking for partnerships and opportunities to help them improve that. And I think that's probably quite feasibly where the key partnership opportunities are going to be for fintechs, is around that ability to get access to what customers are doing, when they're doing it, and then turn that back into product improvements. Click on to the next one. We've come through those four blocks, this new road, as we're calling it, and I think there's one sort of interesting point to mention, which is that despite this pull of digital finance, which is driving connection not just between providers themselves, old and new, and fintech to fintech, as well as bank to fintech, as well as fintech and bank to customer, and across borders, there's a counter pull, which is that in some regions that borderless connectivity is becoming more of a challenge. We've seen moves for greater national protectionism in the US. We're seeing it in Europe, not just in the UK because of Brexit, but elsewhere too. And I think what's interesting is that whereas financial service hubs in the past were around, and they were around to stay, that mainly because of the much slower pace of financial services a decade or more ago, digital finance is much more fluid, and it can shift and change in terms of its sort of center of gravity quite quickly. I don't know if you can see it on the screen, but China just 3 years ago barely featured as a sort of main location fintech hub. Of course, today I think nobody would question that China is and is quite likely in the future going to be a fintech hub. And I think what's worth mentioning here is that yes, key financial centers will likely always maintain some sort of prominence. But that doesn't mean that other parts of the world, with the right approach, the right ecosystem, the right combination of entrepreneurs, the right openness, and the regulation to underpin that openness, can't suddenly appear on the scene and become real forces of fintech authority, fintech dominance. And I think that's one of the kind of key messages that we're saying to the marketplace, which is you need to think about each of these 4 blocks in turn. You can't just cherry pick relevance and think that if you don't have a strategy which focuses on openness, on data and automation, that's going to do enough for you. This is really about thinking about these 4 blocks, these 4 foundational blocks, as a whole, and working out where what that means for your organization, what the opportunities that what opportunities are out there, and therefore how you take these 4 blocks to respond to those as a whole. I want to thank you very much for listening today. As I say, the research will be available to download directly from the site, but you can also download it via the link that's in front of you on the screen there. If you have any questions, please do send them to us. You can see our email, my email rather, on the screen there. So do please send them over. And I do hope that you'll take time to download a copy of the report and come back to us with any thoughts, suggestions, questions. There's more data available on that we have access to that there's not in the report. So if there's any particular angle or dimension of the report or the research that you'd like more insight or more background on, please don't hesitate to get in touch. But otherwise, happy reading, and we look forward to hearing from you. Thank you very much. Bye-bye.